Hey guys, Steve Ferguson here, your modern mortgage loan advisor. Thanks for tuning in. If you're self-employed, this video is definitely for you. We're going to talk about some really interesting points today, including what do lenders really look for when you're self-employed? How do they calculate your income? How are they looking for ways to disqualify you? How to create strategies that get you to the point where you can buy homes and as many homes as you would like. If you're self-employed, I've got some news for you, so stay tuned. Before I get started, please make sure to like or subscribe to this channel. I really appreciate it. Love it when you guys do that. It's a big deal for me. Plus, I really want you to make some comments. If you have questions, drop the comments, drop the questions, because I want to answer those for you. And I'm going to do some things inside this video which are going to hopefully motivate you to do the same thing and to drop these comments in here so we can have a better conversation about it. So let's get started. Now, as always, I've got a list. I want to make sure I hit all of my lists for you guys. That way you know what's going on, you know what to expect. So the very first thing is, why do self-employed borrowers get denied? Okay, you're self-employed, all right? You have a business to run. You have all these expenses that you're going through, and you've got a choice to make. If you're going to apply for a mortgage loan, you can either claim all of those expenses, save money on your taxes, but now you probably won't qualify for a traditional mortgage because you don't claim enough income. Or you claim all that income, you don't write off much of anything, and now you pay a huge chunk of money to Uncle Sam, and now you can qualify for a traditional mortgage loan, okay? Now, there's a lot more involved into it, but I want you to look at the very basic information here. Look, from a traditional mortgage standpoint, we are looking at tax returns only. We don't look at anything else on a conventional FHA, USDA, or VA mortgage loan. So if you write everything off, unfortunately, this system is rigged against you, and you're not going to get credit for all of your real income. So that's the number one reason self-employed borrowers get denied, is because you don't show enough income on your tax returns. Now, there's lots of programs out there that exist that don't require you to show any income on your tax returns if you're self-employed. So don't get discouraged with that, but please understand traditional financing, traditional rules, tax returns are everything. You write off your income, you're stuck with what you've got, okay? So we're going to address some of this in a minute. Stay with me. What do lenders really care about when it comes to getting financing for a self-employed borrower? A couple things. Credit score is probably one of the number one factors, and income is the number two factor. Now, let's say you have perfect credit and you don't have enough income. Are there programs for you? Absolutely. Let's say you don't have perfect credit, but you have plenty of income. Is there programs for you? Of course. So there's definite strategy here, guys, that we can look at to get you where you want to go. But understand, from a mortgage perspective, we're looking at very specific details. The third feature that we look at is debt to income ratio. So if you make $10,000 a month and your debt is $5,000 a month, that's called a 50% debt to income ratio. That means 50% of your income goes to debt. So there's limitations on your debt to income ratios on several programs. So you have to keep that in mind as you're looking to qualify for a mortgage loan. The more you're educated about what's available to you as a self-employed individual, the better you're going to be, the lower the interest rates, the less money out of pocket, and the happier you're going to be on your mortgage loan. I work with self-employed borrowers every single day, all the time. And I'm self-employed as well. So it's important to know this information when you're looking to buy a home, okay? Now, how do business write-offs affect approval? So let's talk about business write-offs just from an individual perspective. Let's say you're a baker, okay? And you've got all these materials you've got to buy. You've got a storefront you've got to pay for. You've got internet. You've got phone bills, employees. As you write that off on your tax returns as expenses, which they are, then that gets deducted from your total income, okay? So gross income's $1 million a year. Expenses are $500,000 a year, and now your net income is $500,000 a year. So from a traditional mortgage standpoint, we're qualifying you after those expenses are written off at that $500,000 of income. Now, what we can count back is depreciation, okay? And there's some other nondescript items that we can count back, but they usually don't total very much money. The biggest one is depreciation. So if you have a lot of real estate or vehicles or equipment that you're depreciating, that money can be counted right back to you as income and increase the amount that you qualify for. So if I had a suggestion on anything, depreciate as much as you can. It's not going to impact you on a residential mortgage loan. However, all those meals you're paying for and car expenses and employment and marketing and all those other things, there's nothing we can do about any of those things. Those are just cost of doing business. So that's what business write-offs really do affect your ability to qualify, or maybe they affect your ability to qualify for what you want to qualify for. So keep that in mind as you're looking at your tax returns. I know you probably have a fantastic CPA who wants to write off everything for you, so that way you don't pay any money on taxes. But if you're looking for a mortgage loan, that can be a challenge. Now look, we're about the halfway part for just a second. So do me a favor, drop a comment if you're self-employed right now and this information is helping you so far. Just say self-employed, because I'm going to get you some additional data and some additional information if you respond to this video that I want to make sure you're set up for success. I'm going to give you some secrets that I'll send to you separately about ways that you can set yourself up to buy homes easier, to qualify for more, all those other things. And I'll hint about it in this video, but I won't get super detailed on it. But for those of you guys who comment self-employed, I'm going to make sure that you get the data. All right. What documents should you prepare before applying? Okay, look, when you apply for a mortgage loan as a self-employed individual, you're going to fill out a loan application. That's going to look at where you've worked for the last 2 years. If you're self-employed, the 2-year history. If you haven't been self-employed for 2 years, that's going to be a challenge for traditional financing. But there are alternative loan programs that don't care if you've been self-employed for 2 years. We're going to look at credit score. We're going to need to verify your tax returns for both your business and your personal returns. So if you have an LLC or DBA or whatever it happens to be, we need all that data in order to properly confirm your income. Your assets are also going to be important. And so we have to see where your down payment money is coming from. Do you have reserves to qualify for the mortgage loan and to make your payments? All those things come together along with your credit score, and it goes into our system, and we determine what you're able to qualify for, which programs exist for you, what your interest rate may be, what your payment may be. All that stuff is super important. So from a lending perspective, if you're self-employed, that's the vanilla product. Now, if we go to alternative loan programs, we could do a bank statement loan as an example. We don't care about your tax returns on that product. We care about, 3, 6, 12 months of business or personal bank statements. There's even a 24-month bank statement program out there, but it will work for personal or business income. So for example, if your business makes $1 million a month on income coming in, then we can count that money towards your income and your tax returns are irrelevant. There's not even required proof of you filing your taxes. So that is a beautiful program and probably the next best thing to sliced bread, in my opinion, for a self-employed borrower. And we work with bank statement loans all the time. So just keep in mind, there's ways to document income. It doesn't always have to be traditional. We can get outside the box. We can get a little crazy on those things and find a solution for you. All right. All right. If you're a realtor and you're watching this video, what options should you be looking for your self-employed borrowers? And if you're self-employed, you need this information as well. Look, ask the right questions. Ask yourself the right questions. Am I going to claim all the income on my tax returns? And am I going to write that huge check to Uncle Sam? If you're thinking right now, not a chance, right? I don't blame you. I understand that. It's a huge amount of money. Think about that. If you wanted to claim $500,000 a year in income as a self-employed borrower, I don't have to tell you how much of a check you'd have to write to Uncle Sam on that. And for being self-employed, you want to make sure that you've got cash in the bank to take care of your business. I'm not saying don't file your tax returns. I'm not saying don't claim enough income. What I'm saying is that there's alternatives if you need them. Bank statement loans. So understand what a bank statement loan is. It's simple. It's bank statements. There's nothing else to it. So if you own Jim's Wrecker Service and you own Jim's Bakery, and they're two separate businesses and they do not intermingle, like you don't transfer money in between the two businesses, and they have two separate businesses accounts, we can use both business accounts to qualify you. Okay. I'll give you an example. I had a school teacher who really wanted to buy a very expensive home. And she said, "Hey, Steve, I know that my W-2 income and my tax returns look really low because I'm a teacher and I don't get paid very much," which they don't. So if you're a teacher, thank you for what you do. But she had a self-employed business on the side that we could document that income. So we were able to use the W-2 income and the bank statement income to qualify her for exactly the house she wanted to buy. And guess what? She bought it. It's great. She got where she wanted to go. And that's because we had the knowledge and the necessary tools to get her through that process. So if you're an agent or if you're a self-employed borrower, knowledge is everything when you're looking at mortgage loans. Not everybody is cut the same, so keep that in mind. Now let's talk about some alternative programs that you could also look at. If you're buying investment property as a self-employed individual, or even if you're not self-employed, as DSCR. a debt service coverage ratio loan. That doesn't care a thing about tax returns. It only cares about rental income on the rental property. You can look at a no ratio loan. So a no ratio loan, no tax returns whatsoever. It's based on credit and it's based on your assets. It is that simple, nothing else. We call that our heartbeat loan. So I've already given you 3 or 4 examples of ways that you can get qualified as a self-employed borrower. Remember, it is much less expensive for you to use a self-employed directed loan, like a bank statement loan, even if it has higher down payment or higher interest rates, than it is to claim enough income on tax returns and write that huge check to qualify for the same amount of money. Let me say this again. It's less expensive to do an alternative loan product when you're self-employed than it is to go traditional loan product because of the rules and regulations that exist. You'll be writing a very big check for over here. Over on the bank statement side or the non-QM side, your rate's going to be a little higher. You may have a little more money down payment, but you're not putting all that money in the government's pocket to qualify. So there's alternative solutions here that you guys need to consider as you continue to move forward and you're looking for ways to expand your opportunities, expand your wealth, build your portfolio, buy rental properties, get the home you're wanting to buy. You've worked hard in your business. You deserve the ability to go out there and find the house that matches what you've done in your business. So if you leverage this the right way and you've got the right information, then I can certainly help you get there and get you across the line as a self-employed individual. So please keep that in mind. All right. Now, what I want to point out too is in the description of this video, there's a section in there that says get a strategy call, and it's got my phone number on it. I want you guys to call me. I don't care where you are, what state you're in. It doesn't really matter to me. Let's have a conversation. Let's walk through what your situation is. If I can't help you, I'm going to plug you in with somebody who can definitely help you, but chances are I'm going to be able to get you taken care of. I want to make sure that we work together and get you across the finish line and get you where you want to go, because I know what it's like to be in a situation where, you keep hitting roadblocks or dead ends and you're trying to get across that line for you and your family, or buy a rental property or whatever it happens to be, and working with people that don't have the knowledge behind that. So I love working on this side of things. I'm self-employed. You're self-employed. If you're an agent, you have self-employed clients. This is a great opportunity to get in front of those people, help them get where they want to go, meet goals, exceed goals, and build wealth for your family. Guys, I really appreciate you. Please like, subscribe, comment. Don't hesitate to share this with anybody that you know. This is so important out there. You've got to have it. And I think the self-employed community is underserved. So appreciate you guys. Thanks for getting out there, stepping out, getting self-employed, hiring people, adding to the economy. You guys are awesome. Thanks again. You guys have a great day. Bye-bye.